Welcome back. You're watching us here on Chartbusters and CNBC-TV18. We have a guest with us in the studio after a very long time. Gagan Banga joins us in our studio. On the earnings radar is Sammaan Capital. The company reported stable asset quality in the second quarter, though it reported a net loss because of increased provisions. So let's take it straight to Gagan on all those parameters itself. Gagan, I'm looking at your numbers, but two things stand out. One is the acquisition that you've made of Sammaan Finserv for about 5,500 crore book, and your provisions that has increased significantly at around 4,500 crores. What explains this, and what are the pain points out here? If you could explain why the provisions were so much higher, and the loan book as well.
So these are not technically provisions. What we've done is that we've tried to isolate our subsidiary, Sammaan Finserv. So over a period of time, it will become sort of a mirror image of the parent. Its core capabilities are around affordable housing related lending and the semi-urban type of MSME lending. So to isolate that company in order to be able to focus on that in the future, we acquired all the legacy assets and consolidated the legacy assets on our balance sheet, which is Sammaan Capital's balance sheet. While you run the process, you got to make sure that it's done at arm's length. There's a fair market value. So basis cost of capital of external parties involved, the duration risk, the credit enhancements, etc. The fair market discount came at about 2,500 crores, which has nothing to do with the credit quality per se. This 2,500 crore discount, since the parent chose to acquire, moves to the parent as a general provision pool. So that's just a flexibility which is available to the parent to utilize at any point of time here on. What stays in the subsidiary is a 5,000 crore AUM, which is completely cleaned up. It has a residual NPA of only 25 crores. So that's the degree of scrub which was done. So we did a scrub at the sub level, at the parent level, figured out what the proposed credit cost could be in due course of time, realized that we were already provided enough. So this was a good time then to do this transfer and allow growth to come back.
Okay, all right. Hi, Gagan. Good to see you in the studio after a while. Give us a couple of details, and if I'm looking at the absolute, AUM number, that's the lowest I've seen in multiple quarters. Could you tell us what is the growth outlook from here on? How do you see dispersals shape up? And also give us an idea about your credit cost guidance from here on.
Sure. So as we were going through this whole, so to say, internal restructuring,
yes,
we also chose to use the same time. You can't be doing non-operating stuff every quarter. So we chose the same time to utilize some of our provisions, which we had built over a period of time, and do a cleanup in terms of sales to ARCs, write-off of assets, etc. So that has resulted in a net 3,000 crore reduction in the AUM. What we've also been talking about is that the business should be viewed in two different buckets. One is the legacy book rundown, which we had started the year with 38,000 crore stock. Within the financial year, we've been able to run it down by as much as 8,000 crores. Just in the last quarter, we had cash collections of about 3,100 crores. So that rundown process is going about very, very smoothly. And now with so much of a provision buffer available to us, I believe we can also accelerate this process quite meaningfully. We are looking at another 10,000 crore reduction in the book in the next 12 months. So that's the speed with which we should be able to run this down. And the idea is that by end of fiscal 27, this is a single digit contributor in terms of the overall AUM.
Right. Just a couple of questions then before we wrap this conversation. You've given us the credit cost guidance of 80 to 100 basis points. What gives you the optimism out here at a time when everyone else is talking about, some sort of pain point in asset quality? And you did speak about you having run down the legacy book. All things considered, what is the AUM that one should look at over the next couple of years?
We will be looking at an AUM of, by the end of next year, 75,000 crores. And the year after that, we should be looking at something around 90,000 crores of consolidated AUM, which includes the AUM of the subsidiary. So that's the broad guidance that I can give you. Our typical credit cost over the last few years has been in the range of 125 to 145 basis points. But we are also now sitting on imputed provisions of about 10,000 crores. On a legacy book of 30,000 crores, that's already like 30% provided. How much more do I need to provide? So in that sense, the 80 to 100 basis points guidance is given more for incremental business. As we do step up our affordable housing piece, that's the type of a credit cost which is expected from there.
And would you look to, at some point monetize your affordable housing book? Because it's currently 5,000 crore. You say it's clean, but, would that give you an opportunity to perhaps at some point look to and unlock value here?
Give us a timeline and give us what the AUM should look like of this.
And the price as well.
So first, on your part that I claim it's clean that it's got NPAs of only 25 crores, zero overdue assets. Anything which was even 1 day past due has been provided for. So can't be cleaner than that as a starting block on a starting basis. We've got to first ramp up the disbursals. The company so far has been sitting on disbursals of 250 crores a month, more from an incubation perspective. That should rise to 500 crores a month by March. And sometime in the second half of next year, we should reach a run rate of 1,000 crores. That's probably the more appropriate time. When your AUM is north of 10,000 crores, your monthly disbursals are north of 1,000 crores. That's when perhaps proper price discovery will happen.
And what percentage will you all be looking to unlock value?
We're not looking at it from a capitalization perspective. The company is extremely well capitalized. Today, it's running on a debt equity of 1:1.
So it'll be trying to get a valuation.
Yeah, it'll be strategic capital. And when it's strategic capital, it depends on whether they want 26 or they want control or whatever. We do appreciate the fact that this will require a partner. And we at that point in time should be open to any configuration.
And the rough valuation would be 1 times AUM?
1 time AUM.
All right. Okay, all right, Gagan. Appreciate you joining in. We'll hold you to these numbers for the time being. The street appears it's looking through the past quarter. Looking ahead explains why the stock has recovered from the day's low, currently up close to around 3%. Well, on that note, though, we'll have to slip into a short break. A small programming note, though, as we do that. 11th SBI Banking and Economics will get underway this afternoon. Cash Finance Minister Nirmala Sitharaman addressing the gathering at 2:45 p.m. today. Other guests include the Finance Secretary, Mr. Nagaraju, the Revenue Secretary, Mr. Malhotra. You have Chief Economic Advisor, Mr. Nageshwaran, and IRDA's Mr. Panda, and ex-SEBI Chairman, Mr. Damodaran. All of them join them later on. Catch this exclusive coverage of the event only on CNBC-TV18.